Many markets across the globe are struggling to pick up after the year began. We've seen the Japanese market closing on the negative, Nikkei 225. After that, I think we have the European indices, S&P 500 was on the negative. I think they have so far recovered.
I think today actually.
Yeah, they have recovered today. Yeah. Significant move. The FTSE 100, which is UK based, was on the negative as well, driven by the high inflation rates in the UK currently. They have recovered as well. After that, I think we had, that's still FTSE 100. I had requested for the Dow Jones Industrial and the S&P 500. It's okay. Now, sir, Mr. Nahashon. Oh, the S&P is finally here. Awesome, awesome. You have been following the World Economic Forum, the discussions there.
Not perhaps as much, but yeah.
It's ongoing. I think by the end of the week, they should have completed the conversations. Yes. Most of it is happening virtually this year.
Yes.
But just your observations and a few comments that you took home from the conversations there.
Well, I guess this year the conversation is very much like every other World Economic Forum for the last few years, where there's a lot of concern on the environment. I think right now that's a conversation that everybody is having, and it deserves to be had. And the question around how much real funding is actually allocated to protecting the environment, because there's a lot of rhetoric but no real investments in managing how you actually protect the environment. So there's that conversation, and I don't think it's any different this year. It continues to be what everybody is discussing. Then of course, world leaders are also concerned about volatility in the markets, especially as an outlook to 2022, and what can be done about this, especially around central banks' reactions to inflation from last year. So the conversation we were just having with you earlier before the break, now that's also a concern for world leaders, and how best can central bankers react to inflation. Of course, central bankers brought us here. You know, you printed money to get us out of not a financial situation, but really just a health situation. So you have COVID that created lockdowns and so on, and then you started printing money as a reaction to that. So that's a bit dangerous.
They were trying to solve the problem of velocity of money.
Yes.
By printing more money.
By printing more money.
And it's just that the money was not moving.
The money was not moving, and it was just there. And then now when you open up economies, that money is still there. Then suddenly you have an upward inflationary pressure.
Yeah.
Now, of course, at Davos right now, everyone is running left, right, trying to figure out how do we deal with this now, how do we deal with this, otherwise you can have a hyperinflation situation. So those are the two main things that I think that we'll be watching this year.
Yeah. Any conversations around digital currency?
So when it comes to digital currencies, they haven't said anything this year, but last year they referred to it. Last year it was actually quite a deep conversation. In fact, last year, for the first time in Davos, they actually acknowledged digital currencies. They acknowledged them and recognized the systemic significance of digital currencies. In fact, they released 8 papers last year
on digital currencies.
On digital currencies, yes, and how to the regulation and framework around digital currencies, how to have cross-jurisdictional policy development. How to have public education around them, risks associated with central bank digital currencies, and then and even not just the risks of blockchain in itself, and those questions around the interoperability of the technology, how you can cross over jurisdictions with that technology, because the thing with digital currencies, it doesn't affect any one country. So you have to sort of have a lot of collaboration around how you approach digital currencies. So last year there was a very deep conversation about laying the foundation for sustainable growth of digital currencies. and creating a proper regulatory framework.
Yeah.
So there was that concern, but this year they haven't mentioned it. I think it's because they covered it in so much detail last year, or maybe they still time to
yeah,
discuss it.
It's going on until Friday, and I
Yes.
saw it in the agenda paper
Yes.
for Davos 2022.
Yeah, because there has to be greater international collaboration,
Yeah.
for sure, around how you approach digital currencies. So Kenya says we can't touch digital currencies, then Uganda says you can.
And then it's a problem.
It's a problem because then how does a Kenyan who's buying something in Bitcoin from Uganda, for example, then trade? So there has to be a much better international collaboration.
Yeah.
So it's a deep issue.
Do you foresee a time when perhaps we will take a significant shift, for example, from the shilling to maybe the pesa, the bit pesa or something, for globally or even just regionally?
I guess the biggest issue for Bitcoin has always been just the volatility. Okay, one of the things about currency is that it has to be stable.
Yeah.
Of course, yes, currencies still lose and gain value over, in the normal day usage, but you don't need a currency to have the kind of volatility we see with Bitcoin, where it moves like 20-30% in a day, then how would that be a store of value,
It makes no sense.
Yeah, one of the attributes of a currency is that it should be a store of value. So if you're losing 20-30% of the value of your currency in a day, then how does somebody then
store value
with that? So that's always going to be an issue. So I don't think there's a near-term threat to legal fiat currency from digital currencies. No, I don't think so.
All right. The Economist indicates that the world is set to lose around $100 billion because of vaccine inequity. The rich countries have enough vaccines, the poor countries do not. And I think the penetration in the country today is 8.5%, if I'm not mistaken. Have you seen this being handled, Davos?
Yes, in fact, it's a big conversation right now, and they are actually discussing it. And the figure is actually much higher. If you look at most rich countries are at 40% vaccination rates, most of them. And then in Africa, as you said, nothing more than 10%, even in countries that have really tried, like Kenya. And then for Africa as a region to get to the levels where, like high-income countries, we actually need to build capacity, and we have a funding gap of between 130 to $410 billion.
Yeah. That's
8 to 25% of our GDP. That's really significant. But yes, there are steps that are being taken. If you look at a company like BioNTech, recently collaborated with, or is collaborating with Rwanda and Senegal to actually build capacity to produce their own vaccines of up to 40 million doses a year. So that's already been done, and that should help with creating a little bit of vaccine equity, because one of the things that COVID taught the world was that we are one village. Finally, everyone realized we are one village, and there has to be more collaboration in terms of how we deal with healthcare. It's one country's healthcare concerns became everybody's concern. It started in China, now everybody is suffering because of it. But of course, when it comes to Africa and what we are going through right now, there are three main concerns. So you have production capacity. Do you have the ability to actually produce these vaccines? And if you do not, how quickly can you do that? But then the second factor then becomes funding. Yeah. Do you have the funding for it? We are dealing with so many issues right now. We're dealing with our debt. We're dealing with the need to create, infrastructure. Now, suddenly you're telling us to start investing in factories to manufacture vaccines. Do we have funding for that? At Davos, that conversation came up. So they were suggesting, it was an interesting conversation at Davos where they were saying, how about we, local businesses actually help with the logistical challenges that governments have to deal with in distributing vaccines, for example. Yeah. How about local companies help in creating campaigns around vaccines acceptance? Because we also have that issue. There's a lot of hesitation around getting vaccines by some
I don't want to have the mark of the beast, quote unquote.
want to grow a tail. I don't want to grow a tail. Yeah.
Yes.
So I'm not getting the vaccine. So a lot of the costs around funding are because of that as well. So creating the logistical capacity and also just awareness around vaccinations. And some of these are costs that can be handled by big brands in their local company. So Dave was suggesting that business leaders should step up, and then that would reduce the funding gap, the one I mentioned of 130 to $410 billion. Then the third concern around vaccine equity is the distribution infrastructure. Do you even have ability to store these vaccines? So, because
I heard that a vaccine like Moderna needs very low temperatures.
Yes. I don't know the exact figure, but I know it's below freezing. I think so. I don't know, but I know But you need, if you have to freeze these vaccines in large capacities, how do you do this? We've never had to deal with this sort of thing before. So
we had a problem producing oxygen. I wonder if we have a problem producing ice. and sustainable ice that can store that thing for a month or two.
Exactly. So vaccine equity is a big issue right now. Of course, we can also argue that Africa has been lucky not to have the kind of hospitalization levels we've seen in the West, but it's still a concern in case you get another variant. You see, now we are now on Omicron. Now if we get another variant that's probably more lethal, because Omicron was not very lethal, but Delta was. But
they are saying Omicron is the one that is going to give us herd immunity.
It might be, yeah, because it was more infectious but less fatal. So those two are the conditions that are required to create herd immunity. So I think moving forward, the conversation around COVID might not be as heavy and as scary as it was a year, 2 years ago. Yeah.
I saw there's a country, I can't remember whether it was Poland or Bolivia, that has declared that we treat COVID-19 just as any other flu. People should go about their businesses. If
I can see how. I mean, if you have enough people who've gotten it and a big portion of those are vaccinated, I can see how it might become so less fatal that it doesn't warrant the need to now start putting lockdowns, and it might have a bigger social effect to lock down people than to just allow them to just infect each other and create that herd immunity if it's not fatal.
Beyond perhaps COVID-19, I'll want us to go back to the environment question, but just you brought up the issue of risks that COVID-19 portend, and perhaps many other things that are being discussed. But beyond COVID-19, do you foresee other major risks globally this year? I know we've said that we've really overcome it, and what we are having are just policy hangovers, like the one in China, affecting supply chain. But do you see other possible risks affecting global markets?
Well, right now we have, well, not global markets specifically, but just from a geopolitical perspective. We see now Russia again wants to invade Ukraine.
Now that everyone is healthy, we can afford to go back to war.
Now that we're healthy, let's kill each other now. Human beings have a tendency for self-destruction. So now that we are done struggling with lockdowns, let's arm ourselves and invade Ukraine. So that's going to be a concern, and especially how the West reacts to that aggression by Russia. Of course, Putin and Biden had a meeting, and they agreed, okay, we are going to be calm. But immediately after the meeting, in fact, Putin increased the troops by 100,000 on the Ukraine borders. So that tells you that something is going to happen. So that's a concern right now. I'd say maybe that's the biggest one. Of course, environment, that continues to be a conversation, but we haven't stopped using fossil fuels. That's
I read somewhere, and I hope this will not get me in trouble, that America is an oil company with an army. I just read somewhere, but that there's a lot of interest in oil and a lot of dependency on it, not just by governments, but by businesses as well.
Yes.
And there were thoughts that the COP meeting in Scotland last year had a lot of people who are dishonest because businesses are polluting the environment.
Yes.
And then once in a while they go for cleansing.
Yes.
In meetings like Scotland.
Yes.
Are we really getting to a point where we can say we are doing sustainable business?
No, we are not there yet. I mean, the dependence on fossil fuels is still significant right now. It's still the only way to be competitive. Unless governments around the world come out and say, you're not allowed to use fossil fuels, then everybody will then be on the same platform, allowing you to then consider other forms of fuels. But if one company goes green and therefore their products become more expensive as a result, then it makes no sense. Of course, companies try to appeal again also to the consumer by saying, okay, our product is green, that's why it's more expensive, therefore buy from us. But again, consumers just go for price. So this is a scary issue. I think it's really just spiraling now, and it's definitely something that can lead to the destruction of the planet.
Yeah.
Yeah.
I know my producer is about to tell me that our time is up.
Okay.
But there are two things I wanted to mention. One is climate smart agriculture.
Okay.
Do you think we may get a win out of this year's Davos meeting for proper support investment around climate smart agriculture, especially in Africa?
I don't know. Well, there might be some small investments here and there, which are good enough for trial. But in terms of something significant, I highly doubt it. Because right now, even when it comes to climate smart agriculture, it's still very experimental. And I can see how most governments would still want to do things as they know them, because agriculture is a very sensitive area. You don't want to do something aggressively experimental around something that can cause food insecurity within your borders. Yeah. So maybe in small tranches, very small tranches. Again, conversations like this in Davos, they tend to be very fashionable. But in practice, nothing happens. I mean, these guys will discuss this, then in the evening, I think they have these events, but this time, of course, it was virtual. But typically, it's really, you have to go and say something exciting. So they say things like this, but they don't really do much about it. Yeah. And governments will just listen and move on most of the times.
Well, I'm told that I never gave you an opportunity to mention about your company. What do you do at Standard Investment Bank? Oh, yes. So I'm the executive director for global markets at Standard Investment Bank. We are a completely local indigenous investment bank. We have been around for 27 years now. We were founded in 1995. And we do investment banking activities. So investment banking is really, it's not your typical bank. So when people come to us, they come to us because we invest on their behalf. So we help them invest in all these financial instruments we've been discussing, equities, bonds, and we also buy or sell on their behalf in these assets if they want to. From my perspective, from my side specifically, we also have a fund called Mungai. It's a multi-asset strategy fund that gives investors exposure to global financial instruments. So the stocks I was talking about earlier, so if you want exposure to Pfizer, Facebook, or any other stocks that I was talking about earlier, our fund is the only one that can give you exposure to this. Interesting. How much do I need to invest in? The minimum investment is only $250,000, and you know what? We take even as low as 100,000. Okay, and we've seen a lot of. And that's almost the same amount the central bank would take if I wanted to buy into the bond market. Exactly, and we've seen a lot of interest. Investors. We started with the fund started at roughly under 200 million shillings, and we've grown to almost 7 billion shillings now. That's beautiful. Meaning that investors are actually really like the idea of being exposed to global financial instruments. It sounds like an exciting idea. I'd want to have further conversations with you without getting in trouble with our marketing guys that I'm giving you airtime to advertise without you paying. Okay. Stakeholder capitalism is the kind of capitalism that allows for all stakeholders to benefit from a business. This was discussed at the World Economic Forum. It's an idea that has been developed by the World Economic Forum and the big four audit firms, KPMG, Ernst & Young, PwC, and Deloitte. It's an exciting idea. I'd love to see how it pans out, because that would mean that shareholder capitalism, which is the traditional capitalism, would fade out, and we'll have a capitalism that considers suppliers, customers, staff, and then any other stakeholder at play in the business. This has been Markets Today. I was your host, Odhiambura Mugi, hosting Mr. Nahashon from Standard Investment Bank, the Executive Director for Global Markets. Thank you very much for joining us. I hope to have your attention again tomorrow at 4 p.m. as we discuss other elements of the market.